I think there are two factors. I think factor number one is what I call the catch-up effect, whereby if you look at actually the ratio of gold relative to global equity markets last year and the beginning of this year, gold massively underperformed. So there is that catch-up effect. Investors are looking at the underperformance of gold and therefore increasing exposure to gold. Related to that is actually the gold-Bitcoin correlation, and one can get into a debate about whether that's meaningful or not, but the reality is there is a correlation between Bitcoin and gold. The other factor where it's very difficult to get hold of data is I do think there has been some central bank buying, particularly from Asian central banks, increasing their asset allocation in their reserves to gold. Now, having said that, if you look at the fundamentals for gold, the dollar remaining relatively strong, bond yields going up, the Fed not cutting interest rates. Admittedly, I think the ECB will cut interest rates, but that's frankly academic because gold is driven by what the Fed does, not what by the ECB does. Inflation, frankly, okay, inflation is not coming down much more, but we are at a reasonably low level on inflation. So all of those factors actually suggest that upside in gold, frankly, is minimal. And I think gold is now very vulnerable to a setback.
Does the pullback in oil also, do you think that comes into play? I mean, look, obviously the tensions have been the ones that really driven things as well. But is there any more upside, do you think? Is $100 a barrel just probable? Or is that just, depends on the news flow?
Well, my own view is that I think oil is well supported at the moment in a range of 80 to 90. I would be very surprised if we go up to 100 and break through 100 and stay there. We have to recognize that the first quarter of this year and as we move into April, oil, the market is in deficit, and that's partly because of OPEC plus cuts, and that's also increased US demand, increased Chinese demand. But the fundamentals of the oil market relative to other energy markets, fundamentals actually are weak. And we are seeing switching into cheaper energy, whether it's alternative energy such as solar and wind. And also, if you look at the relationship between oil and gas, we've got a situation where gas is now super cheap relative to oil. So it's not surprising that consumers are switching.